Yo guys, welcome back to a whole new episode where I'm going to give you my top 3 tax strategies. Alright, let's get started on the top 3 tax strategies that I use with my customers or my clients. 1, I allow them to open IRAs and SEP IRAs, any investment account. This allows them to store money away without it being taxed. So I recommend you open up an IRA, traditional IRA, or a SEP IRA. Each of those IRAs has a different amount, especially for the year of 2023, that you are able to maximize and put away. For the Roth and traditional IRA, you're only allowed to put away, I believe it's $6,500 a year. And with a SEP IRA, you're allowed to put away $58,000 for the year. Putting your money away allows you to lower your taxable bill by taking it as a deduction and subtracting it from your annual gross income. And number 2, maximize your deductions and credits. Now, if you have a ton of credits, maximize them. If you have a ton of deductions, maximize them. This allows you to subtract from your annual gross income, allowing you to lower your taxable bill. So if you have a ton of expenses, whether that be meals, whether that be airfare, whether that be gasoline, a lot of things can be deducted as a business expense. Now, if you have tax credits, for example, solar panels allows you to take up to 20% of the purchase price, which is a huge tax credit. So I've seen it at $12,000, but it won't, depending on how much you make, you're not allowed to take the full deduction. Whatever's remaining from that tax credit, that credit will do something called a rollover for the following year. So I think this is an awesome one, is to lower your taxable bill, is maximize your deductions and credits. And lastly, probably my favorite one, number 3, is to run a payroll. A lot of people, there are pros and cons to running payrolls, but I've seen nothing but pros. You're allowed to give yourself a W-2 if you do. So there's 2 ways you can run a payroll. You can write yourself a check, or you can run a W-2. So it's just taking money from your business account, applying it to your personal account. Now, if you give yourself a W-2 while you're paying taxes, the business gets to claim the business tax that is paid as an expense. You get to plug in your W-2 at the end of the year, and you're not lowering your annual gross income for the year. So that money's being taxed throughout the year, but you get to not claim all the money back, but you're able to claim the money that you paid in taxes for the year. And now, if you pay yourself just via check or via Zelle or any kind of transfer, you got to think, you don't have to claim that money, because now you have to prove that you paid yourself, which you did by having a paper trail. But on the tax end, you are only taxed as a business on your net profit. So if you lower your net profit or loss by allowing yourself to pay yourself through the business, which I recommend, always pay yourself, you do not need to claim the money that you put away and transferred over to yourself. So this is a great tax strategy. These are awesome. Make sure you guys like and follow, and let me know what you guys think.